everyone, and welcome to this Forex webinar with NinjaTrader, not with NinjaTrader themselves, using the NinjaTrader platform and our quantum NinjaTrader tools. So apologies about that. I think this is only the second one we've done of this one, so I'm still sort of getting used to it. Before we start, can I just draw your attention to the disclaimer, which I know many of you have seen many times before, but please, it can't be stressed too many times. This can be a very risky business. Please don't ever think of using money or use money that you cannot afford to lose. So I'll just take that down. And as you can see, hopefully you'll be able to see my NinjaTrader, which is Ninja 7, one of my profiles. David is giving me his thumbs up. Usually we sit sort of at right angles to each other, but we've had a reconfiguration of the desk, so he's opposite me, and I can just sort of see him peeking through my my monitors. So as I said, this is in this particular session, which we've added to our series of webinars. We really wanted to give the NinjaTrader platform a dedicated session on its own, and obviously with our tools. And this is why we've added this particular webinar. We are back later today, back for day trading with the indices, and of course we were here on Tuesday, where at about 8:30. Just after the London Open, where we tend to look more at the MT5 platform, although David, he is a much bigger NinjaTrader user than I am, and he uses Ninja 8. Right, so that's the explanation for that, because I know some of you have not been, this may be your first time joining us. The purpose, as I said, of these sessions is to look at the Forex market, particularly now as we're just coming out of, not coming out of, but we've had London and Europe, and now we've got the New York session coming up fairly soon. That's before the actual markets open. And it's always fascinating that whatever sentiment, whatever's been happening in one session, how the markets can simply do a 180-degree turn when New York suddenly comes on board. It is the deepest session, deepest liquidity. It's the session with the deepest liquidity, because obviously we have three major financial centers open. And sometimes as new traders, don't perhaps appreciate, because the marketing for Forex trading is on the basis that you can trade anytime, anywhere, and any place, which you can, and you can enter at any time in the 24-hour cycle based on where you live. You can place orders on an intraday basis, on a longer term basis. And I've actually got some trades that I want to share with you, which I'm in at the moment, where I've got a little basket of trades, because I wanted to go in for not an intraday basis, but on a maybe days. I'm not sure it's going to be weeks. We'll have to see how they pan out. And it's fascinating how I think yesterday morning the whole little basket was up something like over 200 pips. And come the afternoon sessions, because I had I'm actually in three Euro CAD, dollar CAD, and CAD, because I'm in three Canadian pairs, because we had very important Canadian news, which I knew was coming up anyway. We had the interest rate decision, and we also had the statement. The whole basket just sort of took a complete dive south, as it were. But that's just part and parcel of what to expect, particularly if you are going to, you want to trade the slower time frames, or you want to hold positions over a number of days. And there's all sorts of other factors with holding on to these longer term positions. First of all, is there's the rollover, and this particular basket is actually in my favor. So when my broker sends me a statement at the end of the day, I can see that I'm actually earning for a change. Usually it's the other way around. So that's something else you have to factor in, because it can be a cost of your trading as well. And what I also want to cover is, when you are in these sorts of trades, not only do you have to be aware of the fundamental news, which may upend maybe one or the two pairs in your little basket, but also how the sentiment can change, as I said, from one session to another. And it really is, the whole basket is structured in such a way, it's very much biased towards a positive market sentiment. For example, there's a buy on the Aussie yen and the Canadian yen, and there's a sell on the Euro CAD and the dollar CAD as well. So the other thing you have to bear in mind is also, are you hedging yourself? And I'm not. I'm actually buying the Canadian and I'm buying the Aussie, both in the Aussie yen and in the Euro Aussie, because my view is, I've taken a view, I've looked at the overall market, and I think, you know what, I think we are still positive, despite the volatility. The equity markets and market sentiment generally seems to be more skewed towards a risk on bias, as it were. And I suppose really it also encapsulates the importance of not only looking at the technical picture. Obviously there were all sorts of reasons why I went into these particular pairs, which I'll cover later. In fact, I used our heat map indicator, and I've written a little bit about it on both my blog and on my Forex page. But it also brought in the other elements that we have to be aware of when trading, not just on an intraday basis, but on these longer term timeframes, where not only is it fundamental news, as I said, we had important Canadian news yesterday, which upended some of my positions, not to the extent that I'd be taken up, but I knew that the chances were that there would be a pullback from the very positive position that I had in the morning. But it also includes the importance of looking at the broader market, because the Aussie yen, as we've talked about before, is a proxy for sentiment, a proxy for risk, and it's also tied to what is happening in China. So in fact, the basket not only is there's a technical picture, there's the fundamental picture, there's the sentiment picture, and there's also individual currencies there which are tied to particular markets or different parts of the world. And with the Canadian, obviously we have the oil, and I obviously pay very close attention to the oil price, because if the oil price is going up, then the likelihood is my Canadian pairs are doing pretty well. And everything is explained. And before we start, I just want to bring this to your attention, because you may not have seen it before. Everything's explained in the books that you can find up on Amazon. But what we've done with the Forex books in particular is we have put them together into what we call the Complete Forex Trading Library, which is $9.99, David? $9.99. It is the digital version, but it brings everything together. So if you like, my positions are a reflection of everything that we cover in these books. Now, I'm going to stop there and I'm going to pass over to David, and then we'll have a look at some charts, not only my charts, but also David's charts, because he's been looking at charts on an intraday basis. So we'll see what happens.
That's perfectly all right. Anna says, that all right? Perfectly all right with me. A very warm welcome to you wherever you are in the world. I hope it's a bit warmer where you are than where we are, because it's freezing here right now. So, but then 'tis the middle of winter for us, so it's hardly a great surprise, not a shock news. If you do have any questions, if this is your first time on one of these sessions, you're more than welcome to join us. And if you do have any questions, please just drop them in the chat box. If they're short questions, longer questions, we'll be happy to answer on air for you. Just running my eye over Anna's workspace there, just a couple of things to highlight really. First of all, the top left on the dollar CAD, just a nice example, something we talk about a lot on the volatility indicator. It was triggered there. It doesn't always happen. There is never an always in trading. But what the volatility indicator triggers is exactly what you expect. It triggers the view that volatility is in the market. The little purple arrows top and bottom are telling you that volatility has arrived. That's confirmed with the amount of volume the market makers are participating. It's an indication of the fact that price action has moved outside the average true range, and hence the indicator triggers, because what the average true range is really looking at is giving you a sense of where the price action is average, and if it moves outside that range, the expected range for any particular time frame, we're on the 3 minute here, if the price action moves outside what is the norm, in other words, as measured by the ATR, then the indicator is triggered. The nice thing with it is triggered in real time. And the reason that we get these trap moves is because the market makers are participating. Whenever there's volatility, you can be assured the market makers are either participating in full, or alternatively, they are standing on the sidelines, which will all be reflected in the volume associated. And your expectation is that the market at the very least is going to pause, may congest, may indeed fully reverse as it's done here. And the reason for that is very simple, in that when the market moves fast, our emotion is triggered to jump in. It's a natural reaction. You see a fast moving market, you want to participate, you think there's easy money to be made because the market's moving very quickly. It is a natural reaction, it's a natural emotion to feel, and we jump in. What happens? The market then pauses, which creates pressure in terms of the emotion building because we're not sure which way the market's now going to go, and we start to regret the panic, the snap decision that we made, which was made on instinct and emotion rather than logic. Apologies about that for the silence. Can you actually hear me? Okay, brilliant. Thanks, Melanie. I will explain what happened there because it was quite funny. Someone came to the door to deliver, and in the ensuing scramble to go and attack the delivery man, one of the dogs managed to rip my cable out of the PC, so my audio went completely. So apologies about that. Completely lost my train of thought now. Where were we? With the volatility indicator. So there we are. That's the expectation, is that what we're looking at there is the potential for a reversal, which we saw there. And just bringing in some other aspects there, which are now starting to figure. We can start to see the volumes building as we move into the US session. So we've got an increase in volume. We're literally just moving into it now. We're 2 minutes into the US session. And in addition, the move there has really just retraced back to the volume point of control, which is the yellow dashed line, into that very heavy area of volume. That is the greatest area of volume, as denoted with the volume point of control, which is the fulcrum of the market. So several reasons for the market that it's just retraced to that level. Above that, you've got some heavy resistance in the red dashed line. That's on the accumulation distribution indicator. The width of that line is denoting the strength of that resistance region, which is purely based on price. So you're looking at support and resistance really from two metrics, if you will. On the right-hand side, you've got the volume point of control, which is based on volume, price, and time, which gives a sense of when markets are approaching areas of heavy congestion in terms of volume and where there are lighter areas up and down the histogram. But equally with the accumulation distribution indicator, it is based on price. Conventional price, support and resistance, and there you can see it's hit that region. So there's lots of regions for congestion around this area. And then you're looking at the business of, well, if I'm going to take a position on this, what am I looking at? You're now looking at the various levels, possibly for a move away in terms of break away from a congestion zone. And you've got a decent ceiling in place above at one spot, 32, 22, maybe a little bit up to 24, and down to the floor at 32.10 as a potential opportunity for an intraday scalping opportunity as a breakaway trade. Just pop that one back down, Donnie, sorry. Yeah, that's it. Just to, that's it on the Renko. And again, the indicators work in a very similar way. You can use, as you see, you've got the trend monitor there, you've got the trend dots, you've got the accumulation distribution, which is acting as support and resistance. You've got that very strong platform in at 132.10, which has acted as support so far. The price has held there, it hasn't broken through. Still bearish as signaled by the trend monitor. And you've got the various levels of price resistance up and down the chart there as well, with the trend dots working in tandem with the trend monitor. The trend dots will always transition first. They work very close to price action, but they work really well with the Renko in conjunction with the trend monitor. The trend monitor will transition more slowly. As you can see there over to the left on the Renko, we had the the reversal, the little pullback. We had the rally, then we had a pullback into a congestion phase. The trend dots changed color. They went into red, then they went into a little bit of blue and gray. But the trend monitor only transitioned to a darker blue. It never actually transitioned into a darker red or even into a full-blown reversal from bullish to bearish, which is what we expect to see. So the trend monitor takes a more considered view. The trend dots work very close to the price action, but they work brilliantly together. And finally, just down onto the bottom right on the CSI, what I've been looking at particularly, and I did a quick no, it's fine. I did a quick update on in the forum, VPA Traders Forum. The pound's been under the cosh this morning, and pretty much universally across the pound complex. I've been following the pound Aussie. You can see there the Aussie's been rising very strongly, the blue line, and continues to do so in the 60-minute time frame. And certainly the pound has been, as I say, has been under the cosh, been under the hammer all morning.
What's interesting also with the dollar CAD at the moment is it's really not going anywhere very much. I had a quick look at what the news is. Unlike yesterday, there's a lot of tier 2 news, I think, for the US. Nothing for Canada, as I said yesterday, but I knew when I decided to take a short position in the dollar CAD that I would be facing one of these, important bits of fundamental news. And obviously with the Canadian in the pair, there's also, you have to consider what is happening with oil, particularly more so in the CAD yen as well as the dollar CAD as well. And also this is the 60-minute CSI, and we can see here is sort of turning down of the dollar, which is the red line, and up until really until the start of this session, the Canadian's been rising quite nicely. This is sort of ticking down there. So this is the 60-minute one. When these two lines sort of travel in more or less in the same direction, what is also telling us is that the likelihood is that the pair that they refer to are going to be in some kind of congestion phase, and certainly not going very far. And over here is a dollar index. This is the 30-minute dollar index. The dollar is falling. It is being sold. How strongly? Difficult to say. As I said, this is the 30-minute chart, but not necessarily strongly against the dollar, against the Canadian. So it's really a case of choose your time horizon, choose your, how long do you want to stay in, how long do you think you want to stay in a trade? Are you looking just for an intraday trading, scalping, short-term position, or are you going to be like me? Perhaps you're looking for something that is going to, you're going to hold for maybe 1 or 2 days, or the trading week, as it were. I don't tend to hold my trades over a weekend. It's a long time since I've done that. Come Friday, I like to look at them and I think, no, because the weekends can be so unpredictable these days. But on an intraday basis, I still monitor them. I still see what's happening on the faster time frames, because they tell me where I'm going to run into difficulties. And what I use particularly for that is I look at levels. Levels are key. David always and I say that this market is all about levels and flow, and that flow, the flow of money in the markets, is either going into wants to be protected into safe havens, or it's looking for risk and it's looking for a return. And what we do as traders, we are always looking to anticipate whether it's going to be a risk on or risk off. And if we understand market sentiment, how the money flow actually works in and out of individual currencies, in and out of currency pairs, as I said, this will help you enormously. It gives a 3-dimensional picture to the chart itself, which is why the book we called there's a 3-dimensional approach to Forex trading, because it's not just the technical, it's the fundamental, the related markets. I'd probably say there's a 4th element now, which is the political one. This is the 60-minute chart, and all I have on here is I have the volume, I have the price, and I have these levels. These are really important. These are my Camarilla levels. I don't use Fibonacci. We've developed our own indicator to give levels some kind of hierarchy. This is in addition to the accumulation and distribution and the VPOC, because this is the S4. This is the fourth level on the Camarilla is very important, because when price goes through that strongly with volume, it is considered to be a potential breakaway or a breakout. But it can also hold as a very strong support line. What often happens, price will then bounce off the S4 or bounce from the R4, as we can see is up there. And often when it breaks through the S4 and the R4, it will often go back and retest it. But if it's broken through, that will then, on the S4, that will provide a really quite a strong resistance line, as it were. Now, from my perspective, as I'm short this pair, this is the key level for me, because it's sort of stuck here at 30. Is it 32.10, David? Around 30. It's around 32.10. So for this position to carry on in the direction that I'd like it to continue, that's the level that has to be breached. Now, what we've done with this indicator.
Apologies. Anna's just having a coughing fit. Sorry, it's a bit sporadic today. I do apologise. Just to pick up on what Anna was saying with regard to the Camarilla, not only are the levels important per se in terms of when they reach these regions, but moreover, what they also provide is a target for two things: a target for the potential on the trade. So, for example, here where we're at the S4, if that does break and hold below, then you're looking at a move potentially to the S5 and S6, because unlike many other indicators, we've actually developed this with 6 levels. So below that, as you can see there, we have the S5 and the S6, and the S4 is absolutely key. The region that in the middle there between the R1 and the S1, that's what we call the buffer zone. That's when the market's trading in a tight range. It tends to be oscillating, and then gradually as it moves away from that buffer zone, it moves out to these significant regions which are being tested now. So the first thing is to consider those levels as potential target opportunities of S5 and S6. It's very different to the often used risk and reward approach, whereby people say, well, if you're going to put a risk of 10 on the table, you should be looking at a reward of 20 or 30. In other words, 2 to 1 or 3 to 1 or whatever it is. I'm afraid that's nonsense. What you have to use is what the price chart is telling you, because what it will tell you is the extent of any potential opportunity that the market may or may not deliver based on that particular time frame and that particular instrument. It's as simple as that. It's nothing to, the market doesn't care whether you have to have a comfort blanket of 3 to 1 or 4 to 1 or whatever it may be. The market delivers what it will deliver. If it's 10 pips, fine. If it's 20 pips, fine. If it's 30, whatever it is. But it will be dictated by all manner of things, not least of all VPA, but of course these levels, the levels that are constantly changing, either based on price or based on volume, one or the other. And those are the levels that are so important. So the way to use the camera is 2 ways. First of all, as look at it in terms of potential target area for an opportunity. And this is a classic example where we're moving to S5, F6, S6. So that's delivering however many pips it's delivering. The other way of using the indicator is to set your stop loss levels. So to wherever the price action is, you look at those regions. For example, if you were looking at this as a long position, maybe on a different time frame, whatever it may be, if you thought this market was going to reverse, then you might use the S5, S6 levels as your potential stop loss, for example, on a long position. So it just offers many different ways of utilizing it. And indeed, the videos, we explain all this in a lot more detail. So I just wanted to highlight it. Anna's back now, so I'm just going to pass back.
Brilliant. Thanks, darling. Now, what's also very cool about this indicator is that I'm looking at the 60-minute chart here. Now, the levels that are on the 60-minute chart have actually been calculated to remain on this chart until the end of the week. And what that means is when I move down to the faster time frames, so if I move down, say, to the, let's say, the 3-minute chart, you will see we are looking at very, very different levels. We have got these are calculated on a daily basis, so they are refreshed at the start of the session, which is about 10 o'clock in the evening, our time. So these change on a daily basis. But what that tells you is how that helps you is when you are looking to take a position, excuse me, on the faster time frames, you need to know the levels that are key on the slower time frame, and they will also help to confirm to you that when a price reaches a significant point, as we have seen on the 60-minute chart, you will know why it stopped, and the chances are it possibly could reverse. And you can see here that, in fact, the price dropped into what we call the buffer or this neutral zone, which is basically a consolidation phase, as we can see here. And it's now bouncing off this R1. So what the R1 is telling you is that it's found a platform of support at 32.17, something like that, and it's now looking to move higher. And what it also gives you the confidence to do is, if the slower time frame is showing, maybe as this is a bearish picture, the dollar CAD has been bearish, and you're on the faster time frames and you want to take a counter trend trade than what is on the slower time frame, it will give you the confidence to take that, because we've seen on the 60-minute, we said the R4 is hugely significant for all sorts of reasons. I'll just wait for that to repopulate and break, and we can see here it's provided some strong support. So knowing that the dollar CAD overall has been bearish, I'm short the dollar CAD. I've been short since the basket went on. But down on the faster time frames, given that that's given me this strong support line, I look at the 3-minute chart and I think, yeah, you know, that's potentially a good point of entry. Now I know, well, where is it heading for? Well, this is the R2. That's the first potential target, and then I've got the R3 here, and together with the Camarilla, the Renko, as we can see here. This is the congestion phase that we have been watching and monitoring since the market opened. And now this has actually gone to bright blue. And where is this price heading? Well, on here we have the VPOC. We have it at, I will roughly, is it 132, 132.33, something like that. That is also another area of resistance. So we know that if it does manage to carry on higher, this is where it is likely to stop. And looking back again at the, where are we on the Camarilla? Let's look at the volumes that are underneath. And in fact, it stopped. It was the R2. It got to the R2 and it stopped. And now it's going back down to the R1. And we'll see. So having these levels on your chart, having their significance, the importance of these levels in the different time frames allows you to have a much more complete picture of what the price action is doing and what it is likely to do. And you can then factor that in to the time frame that you actually want to trade, or take a trading opportunity, and whether that is on the faster time frames or, as I said, I'm on the slightly medium term, as it were. And I just look at the heat map. Is it gone? Where's my heat map gone? Ha! It's disappeared. I can't believe it. There it is. It's disappeared. There we are. And the heat map, as I said, I originally selected these pairs based on what I had seen at the time on the heat map. And at the time, all the yen pairs were at the bottom of the heat map because we'd had this, this swoon in the market. If you remember, we had the flash crash last week. Was it last week? Yeah, last week. Yeah. And equities were selling off again. So they were all right. They were all heavily oversold. And it was really a question of deciding which of the yen pairs I particularly wanted to take a trade in. And I opted, as I said, I've opted for the Aussie yen, which is at spot 22 now, and I opted for the CAD yen, which has now actually dropped down, back down to 24, and it's been slightly overtaken by the Aussie yen. And at the top, I shorted the Euro CAD, and I could have chosen the Euro Aussie, but I chose or even the Pound Aussie, but I chose the Euro CAD, and I chose the Dollar CAD as well. And what I use the heat map for is not only to help me with the initial, not selection, but it just highlights, what is happening in the market at this particular time in terms of ranking of the 28 pairs. Is there, go and have a look at the charts. Depending on the time frame that you're looking to trade, you can even look at this from a faster, in an intraday basis, because often you will see when something is very oversold and something is very overbought, you may have an opportunity to trade it counter in the faster time frames. And then what I use this for is very much as a monitoring. I know where I entered, where they were on the positions, and it also is a quick way. I don't have to look at all the charts. If my pair was at spot 24, as this is now when I entered, and I go and look at it again and it's at spot 15, well, I know it's gone up. So, as I said, it's just if you're as time poor as I am, it's just a great way of keeping, having a heads up of what's happening on the chart. I'm just going to pass over to David. As I said, if you want more information, before I do so, if you want information on any of the indicators that we're talking about, what we've actually done is we've refreshed the front page of the quantum trading site. As we can see here, it's much more intuitive. We have so much information on this site. In fact, it can be a little bit overwhelming, and it was getting quite difficult to navigate around it. So we've tried to simplify it as much as possible. As you can see here, these are the indicators for Ninja. There are explanations of what they are, but more importantly, you can go down to the bottom and there's a scroll bar with each individual indicator, and this is new. You click on the indicator itself. Hopefully it'll load. I'm just waiting for it. And what we've actually done is we've collated the various videos that David has done for the indicator, and it will play both for MT4, and there's obviously NinjaTrader as well. So it just makes it much easier to navigate and to actually find the information on the site much more easily, and explains in more detail how to use not just the heat map but other indicators as well. Right, I'll just pass over to David because all my positions are a bit desultory at the moment. So
go back to the heat map for a minute.
Which one? Back to the heat map? Yeah. No problem. There we are. There we are. Turn myself on.
Brilliant. Just wanted to go back to the heat map for a moment because it's really interesting that what's happening at the moment is we are starting. I mentioned earlier on that we'd seen the pound selling off heavily. In fact, you can see it bottom right there. It's been pretty much selling off throughout the London session. And as Anna mentioned at the start of this, what we often see at session crossovers is this reversal in sentiment. Reversals. This market is all about mean reversion. These currencies constantly move from oversold to overbought and back again for many, many different reasons. But what we're starting to see now, and I've got it on the pound Aussie, I've got a really nice reversal going on the pound Aussie, which was flagged up on the CSI on 5 minute. What we're starting to see now is a move in terms of some buying of the pound coming in. Not perhaps so strongly against the Aussie, but it's certainly there. And you can see it. What's the nice thing with the heat map as well, you can actually see it here visually. You can see it on the 1 minute, the 5 minute, the 10, the 15. You can see that bullish sentiment down at the bottom of the chart, and certainly the four ranked at the bottom there, the cable, pound Swiss, pound New Zealand, pound yen. You can see those cells starting to turn green. And as that continues, clearly as you look over to the right-hand side of the heat map, those currency pairs from the 4 hourly out to the monthly are all very bearish. If that is a longer term change in trend, then obviously those cells in the slower time frames will gradually turn green. But what we're seeing right now is a strong move in the intraday scalping time frame, if you will, where those cells are turning green. And it's just another aspect. Perhaps it's self-evident, but when you're looking at the heat map in this way, it just gives you a really clear visual picture of what is going on, particularly those currencies at the extremes, those of which have been very strongly bullish or very strongly bearish. And then you start to see the change in color from bullish to bearish or bearish to bullish as those cells reflect it. So it's a really, really cool way of using the heat map. And I would urge you, for those of you who have the indicators, I know we've got quite a few people on the call who have the quantum indicators. I would urge you to just view it in this way. Because it is a powerful indicator. Let me just switch over to my side, and I'll pull up the pound Aussie. You can see what I've been rabbiting on about. Hopefully that's coming up. Got the thumbs up from Anna, brilliant. A range of time frames. We've got the 5, the 10, the 15 at the top, and then down at the bottom we've got the 30. We've got the this is the Renko. Which is set, I think, on 1 minute, but I'll just double check that in a minute, and then we're over onto the daily on the right-hand side. And really, all of that was reflected off the currency strength indicator, which I've got over here. You can see this was where we were at, I don't know, this was 12:30 into 1 o'clock. Very strong selling of the pound, so very oversold. Equally, the Aussie up here. Now, the Aussie, oversold for the pound and overbought for the Aussie. Now, what's interesting right now is what's driving the move in the pound Aussie is really nothing to do with what's going on in terms of the Aussie. It's all to do with what's going on in terms of the pound. So what you're looking at in terms of a potential reversal here, which was certainly one thing I had my eye on, which is why I had the pound Aussie up, looking at this as an opportunity for reversal. Whilst we've had the reversal, it is a one-sided reversal. It's an asymmetric reversal. In other words, it's been driven purely through the buying of the pound and nothing to do with selling of the Aussie, which continues to remain up here on the ceiling. Now, at some point, obviously, the Aussie is going to roll. From a trading perspective, just going back to the charts, absolutely nothing wrong with the trade. Where are we? There we go. Absolutely nothing wrong with taking that trade. But in taking that trade, just be aware of the fact that what's driving this is only the pound. It's not the Aussie. And if you were looking at the CSI, then possibly a better trade might be the pound dollar, for example, where you've got the pound rising and you've got the dollar falling. So it's all a question of teasing out all this information. The actual reversal, it was flagged. I mean, we saw it from a price and volume perspective. We had the candles forming here. All of them had lower wicks. We had a lower wick to this one, and then we had the further lower wick here, which really triggered the whole thing. And to isolate out this volume over here, we've got some pretty high volume. I've done this many times before, but if you pull that over, it just gives you a sense of the related volume that is coming into this particular market. And what we're seeing here, this was the first hammer to form. Nice volume under there, falling away a little bit, but nevertheless, narrow spread, deep wick. Then we're starting to see the buying drive in. All of this is accumulation volume, and it's just classical price action where a market has fallen. This was weakness, tried to rally, fell back, decent volume. Then we get the buying coming in on the next candle, then some more buying. It's absorbing, the market makers are absorbing the selling pressure. They're taking the sting out of the market, and they're preparing for a rally. And of course, you would see that reflected across all the various time frames, from the fastest to the slowest. In terms of the indicators themselves, what we're also seeing here is a really nice example. Again, it's all down to moving from the fastest time frame out to the slowest time frame. On the 5 minute, what have we got? We've got the trend monitor, which has transitioned through into bullish. So we've gone from full bearish to full bullish now. In terms of going back to what we were talking about earlier, in terms of price resistance, price support, we're running into a region here in terms of pretty heavy price resistance on this blue line. We've got further blue resistance here. on this level. These other levels, the red dash lines are fairly minor, but these are the main ones to concentrate on, this level here and this level here. And above that, we've got the volume point of control with yet more price resistance above. From a volume-based perspective, we're in a reasonably light area of volume. It's not that heavy. This is the heaviest concentration around the VPOC. So in terms of developing this move, which is really all it's about, is trying to make a judgment call on this particular trading opportunity. Has opportunities per se, but what is the risk? And the risk associated right now is, first of all, this move is purely being driven by the pound right now. That may change in the next few minutes, who can say? But at the moment, it's purely being driven by the pound. And secondly, we've got quite a lot of price resistance overhead, which may cause this market to pause. So it's all a judgment call as to, is that a trading position that you're comfortable to take? It's probably a little bit higher risk than a conventional symmetrical driven price move, whereby you've got rising and falling currencies. You've got strength in one and weakness in the other. So it's an interesting example of really teasing apart all the aspects of how to make a trading decision. Are you comfortable with making that trading decision? If it's higher risk, that's fine, as long as you're comfortable taking on higher risk. If not, pass on to something else. And going back to, let's just pull that back. It looks a bit odd like that. Let's just move that back to a normal size. There we go. Just going back to our CSI, for example. Let's go back to the CSI. Where are we? There we go. In terms of trading opportunities, this strong buying in the pound, where is it going to be reflected just as strongly, but with equal weakness to the other side? Well, you'd certainly see it in the yen right now, because the yen's diving quite strongly. The red line, the dollar also, possibly the Swiss franc, but the problem with the Swiss franc, it's very, very oversold, but you'd certainly see a strong trend there. And you've got the Canadian dollar here, which is selling off. So any of these, and it's just crossing there as well, so any of those would be a potential opportunity, and perhaps carry less risk than looking at the pound Aussie, because in effect the pound and the Aussie are rising together, although the Aussie is flatlining. But all this strength and momentum is being driven purely through the pound for whatever reason. And I've got this on the matrix. You can see the pound Aussie is pretty much down here at the bottom, starting to gain some traction now. Starting to see that buying coming through on this slower time frame, and on the array, and over onto the matrix, a similar sort of position where we've seen heavy selling. We're now starting to see that change, and we're starting to see that buying coming. You can see it here, very strong on the Swiss franc and the yen and the Canadian and the dollar. And this is the one we're looking at, which is the pound Aussie, which is a long way off the strongest pair that is currently trending. So it really just reinforces the point I'm making, that when you're looking at a currency, a trading opportunity, it's teasing apart all the various aspects of it to try and identify which is likely to give you the best opportunity for the lowest risk. And that's really all trading is about. Yeah, sure.
Just wanted to have a look again at the dollar Canadian, and in particular the daily chart, because this is where it's got some fantastic VPA lessons, and also it coincides with the last week's NFP and the Powell statement. Was it not statement? He was on some sort of. It was an event with Bernanke and Yellen, wasn't he, on Friday afternoon? Yeah. And that's when we really had the strong sell-off of the US dollar, when he basically came in and he did row back on the very hawkish stance that he had taken on the December the 19th at the when they raised interest rates. But let's have a look at these three candles here going towards the top of this chart. And bearing in mind the time of year, seasonality, but what's really nice is purely from a VPA perspective, we've had a really nice move higher off. Let's take it from this point here, off the volume point of control. We had a little a pullback here, and then we had as I said, that is a really, really nice trend on the daily chart. But the last three candles that we have here, first of all, we had a candle with a wick at the top of the candle on very high volume. What does that tell you? That tells you that this market is trying to move higher. It's trying to sustain the higher prices, but it falls back. The sellers are coming in, but it's the only one signal. And we talked about in a previous session how with VPA you can get very strong signals, and they can come in a little bit too. They can come in a little bit too early. And the temptation with volume price analysis signals, if we can say, oh, fantastic, I'm going to jump in and that's it. This is my entry signal or my exit signal. But you do have to be a little bit patient. And next day, we had this candle here. Again, it's an up candle, wick to the top, wick to the bottom, and the volume is falling. So if you like, that kind of says, yeah, okay, it really doesn't look as though the price is going to go any higher. And in fact, it didn't. We also had, didn't at the time, but we had this little sort of, what is that, David? Little doji candle? Little doji candle. There's not very little volume underneath it, but the purpose of these three candles is, first of all, we have the initial weakness, and then we have the volume draining away. Now, I did talk about seasonality and how, we have the liquidity has been, lower as it were, but those three candles with that profile, that is a fairly big warning sign. And then I think that is, when's an FP? Today's Thursday, isn't it? Wednesday, Tuesday, Monday, Friday. That's Thursday. In fact, the sell-off in the dollar started off at the start of the new trading week. And what's nice here is we did have a rollover. We had a wick to the top of that candle on reasonable volume. Then we had this candle with a ton of volume underneath it, very tall wick to the top, very deep body, and it fell and it kept falling, as I said, after NFP as well. And this is where we are at the moment. This is so it has fallen below the VPOC. So from my perspective, that I'm short, this is good news for me, because this is a very strong area of resistance. Now, it could actually simply continue sideways and rotate around the volume point of control and frustrate me, because I'm hoping that it's going to go further. But what it also tells me is, where is it likely to go to? And I've got 3150 here, which is the next logical stopping point or support point for this pair. But if we look at going back to this is, as I said, these levels stay on the Camarilla for the next week, for the rest of this week. And I look at the S5, and where is the S5? The S5 is actually just below the 3150, but not by very much. So if this breaks through here, where it is this level here, I've got a pretty good idea of where I think it is going to run to, and where potentially, if this is coming to the end of the week and it manages to get anywhere near there, then possibly I'm thinking, well, do you know what? I've had some nice pips out of this. I'll just close out. But I just wanted to highlight that, because it had VPA lessons on the slower time frame, and also puts into context the price action we see at the moment on the day, which is this little candle here. It's got a wick to the upside, not a lot of volume underneath it. So my feeling is, based on that, let's see if it can carry on lower. I've only got one more day, which is tomorrow. Is there anything you want to say about that, David, or are you happy with that?
No.
That's it. Okay, can I move back to you then? Is that all right? Or is that it? Are we at the...
See where we are.
I'll just turn myself off. Hold on.
Just switching back onto my screen. Hopefully you can see that. Got the array there. Let's just go over to there we go, back over here. And as you can see, we've reached a bit of a pause point, which, let's just pop that up full size, have it at 5 minutes, there we go. Running into these regions, we've got some price resistance overhead there. And bear in mind, as I said, this is only being driven. Let's just go back to the CSI on the 5 minute. Let's just go back here. Here we go. Sorry, that's on 15. Let's go down. Let's just take this down to, let's just go to 10 minutes, see what's happening on the 10 minute. The Aussie it's moving, but it's not moving, as quickly as you would expect. For this to develop into a really nice position, you really want to see this moving quite strongly. And if you were looking at a pair such as the pound yen, in fact, let's just flip this, flip the whole lot over onto the pound yen. Let's just go back here. Just type this in here, GBP, JBY. There we go. That should change them all. They're all linked. There we go. We've had a much stronger development of the trend on the pound yen, certainly in terms of the 5, the 10. It's reaching a pause point in the same way that it is on the pound Aussie, but you've had a longer run at it. So it just reinforces the point. You're just pulling apart all these various aspects. This is the Renko. Just fantastic to use in combination with the time-based charts. Use exactly the same indicators. We've got the trend monitor running. We've got the trend dots. They work brilliantly with it. You've got the pivots there. We've got the support and resistance here. You can see we've hit this region here. So but what it does is it smooths out the price action into a neater chart, if you will, built purely of bricks. And the way the bricks are built, this is the Renko optimizer. And it actually delivers the optimal setting for you at any time of the trading session and for any instrument. So if we just click on the 1 minute for a moment, you can choose any time frame. I tend to choose the 1 minute or the 2 minute. And it's very different. You can see it was on 47. It's now on 18. We'll just click that. That will actually open the Renko chart again. Sorry, let's just click on it again. There we go. Okay, so it's now changed. It was, I think it was 48. It's now come down to 37. And what that means is that the optimal brick size for the pound yen right now in this trading session is 37. It doesn't mean 37 pips. It just means 3.7 pips. So each of these bricks will be worth 3.7 pips. And it just delivers the optimal setting, because if you think of it logically, choosing a brick size is pretty hit and miss, really. How do you choose it? Do you go 2, 3, 1, 1.5? What is it? So what the optimizer does, it actually does all the calculation for you, because those optimal settings change throughout the trading day. The best setting for a Renko brick size in the Far East and Asia will be very, very different to the London session, which again will be different to the US session, because the markets are more volatile, there's more liquidity, and 26 different reasons. So it's not one size fits all. You can't trade the same brick size throughout a 24-hour period. It will vary continuously. It's exactly the same principles we apply to the tick speedometer, where tick settings change throughout the session. Globex, they're very low. As soon as the cash markets open, they spike enormously. So it's just a question of setting your charts to the optimal setting. It's all about managing risk and trying to factor out those aspects of it that remove or reduce the risk. And one of the risks is just guessing settings for tick charts, for Renko charts, whatever they may be. It just takes that risk level down a notch or two and gives you the best chance of success in whatever it is you're trading at whatever the time of day. Just pop that down. There we go. We're at the pause point, and just to round off and go back to almost where we started, got the volatility triggered again. Here it is. We're on the 5 minute here. Bang, up it goes. You can imagine, you can feel traders thinking, fantastic, I'm going to jump in here. The market spikes suddenly, up it goes, whoosh, 10, 15, 20 pips in a very short space of time. They jump in. Now what's happening? Trader regret is kicking in. Fear. Have I done the right thing? Why did I do that? Why did I jump in so quickly? And now I've got to sit through this. Ultimately, this market may indeed continue higher, but the pain of sitting through this will take its toll, partially through being stopped out anyway, but partially also through the emotion that is then ground out in terms of sitting through a move that's going sideways and actually looks as though it's going in the opposite direction. So that's the You know, the market makers use this all the time. It is a classic tool they use in every single time frame in all markets. So please, 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 if you don't have the volatility indicator, get it, because it will keep you out of trouble. And if you're in a position and it's triggered, you've got a decision to make. Do I stay in? Do I get out? But at least you know. I'm going to pass back to Anna. We'll wrap up.
And I've just moved over to the Aussie yen. I just wanted to see what was happening there. Actually, not a lot. Looking at the daily chart, if I just pull that up, this is where I'm long this one as well. It is a very, very narrow slither of price action that we're looking. I think the market's all generally. I think that there's a lot of Fed people speaking today, and there's also Powell coming along. He's at another event, and it's some economic get together. But a bit like my one, yes, in January. That should be fun. But what's interesting about that, and just something to be aware of if you are going to be trading around 5 o'clock our time, and that is he is taking questions. He's taking audience questions. Now, of course, you know, it could be planted, the questions, as it were, so, you know, the right answers are delivered. But it's one of those events where it does have a degree of uncertainty in terms of what he may or may not say. So just be aware of that. He is around at 5 o'clock our time today. Right, just very, very quickly, David mentioned the VPOC. Again, back to the pages that we have reconfigured at Quantum Trading. Makes it so much easier to find. You can drop onto the front page. All the indicators are listed. You can see them on a slider. Just click on the slider, and it just everything. All the videos explaining how the indicator works, how you can apply it in your own trading. Because with both with volume price analysis and with the indicators, we make no bones about it. You can integrate these into whatever method or whatever system you have been using up until now, whatever your trading tactics have been up until now. VPA and the quantum indicators, what it does, it strengthens them. We have traders who use Bollinger Bands. We have traders who use Fibonacci. We have traders who use Elliott Wave. And the feedback we get from these traders is that what it has done, it has helped them. It has made their tactics. It has given them extra confidence in their tactics and validated their tactics. So it's not a case of, you know, hey, this is VPA, this is quantum. It's either our way or the highway. Absolutely not at all. And whether you just buy one indicator, or you buy a bundle, or you buy the complete package, it's really very much up to you. You can, many of our traders start with one. It's always you know, we have emails from people coming back after 4 years who've actually been out of the market and have said, oh, you know, their New Year's resolution has been to come back into trading, and the indicator is still there, and you know, it's re-enabled. Maybe they've changed machines or something. So as I said, it's one thing about our indicators, that people who do buy them, they do have them for life, and they are yours for life. And what is also that's slightly very different is that if you buy the complete package, you invest in the complete package, when we develop new indicators, they are automatically added to your package. You don't have to pay us any more money. And as you can see here, I know we've been talking about NinjaTrader. The Trading View indicators are available now, and they run on Mac and Android and sort of iOS devices. So as I said, a fairly comprehensive suite which you can explore in more detail at quantumtrading.com. With regards to the books, you can find them here, details on my site. These are the individual ones, and these are all the box sets that we've put together. This is the Forex Trading Library, as I said, which really covers everything that we have been talking about today. And finally, if step further from the indicators, we've put everything together in the complete Forex trading program, and that is at this site, Quantum Trading Education. This is us. We're not here at the moment. We're somewhere else. And these are the modules, 5 very comprehensive modules, lots and lots of videos, lots and lots of PDFs, webinars, resources, everything that you need to know, in our opinion, to make a success of this incredibly complex but incredibly fascinating market. And finally, if you want to get in contact with us, all you have to do is just quickly, you can either drop me a line at anna@annacooling.com or David at quantumtrading.com on anything that you've heard today. So thank you very much for coming along. David is waving goodbye. Apologies about Harry and Bertie. We'll try and keep them under better control. They are very grumpy old men these days, I'm afraid, the pair of them, and they don't like their territory being invaded. So if you're joining us later, great. We'll be looking at the indices. I don't think there's much going on though, David, is there? So
I'm just having a look now.
yes, David's having a look at the YM and the Nasdaq and the trading in a slither. I think they're all. Mind you, has the China thing? There's supposed to be some joint communique from China and the US about the trade talks. I'm not sure if that's actually come out yet. Maybe that's all. But anyway, I'm sure we'll find something to look at. And so if you're coming along to that, great. Otherwise, we will catch you next time. Take care.